All right, good morning, everyone. Today is October 27th, 2021, and I'm back with another edition of the Wednesday Morning Live Show. And I will be posting a replay of this video on the show page after I'm done. I know most of you guys watch it afterwards. So, anyway, without much further ado, let's dig right in. Stock markets at an all-time high for what it's worth, and coming off of a nice little 5% dip. Actually, it was 5.5%, but nice little dip there. And somewhere along the line, I had a trend line drawn across the highs, and you can see it broke that trend line, broke back above the 50-day. So that was a reasonable little pullback. Interestingly enough, if we look at the year to date, as we approach, we're into the third quarter now. Um, Jesus, almost Halloween. So let's see, we're a couple of months left in the year. So if we take a look at the year to date here, we see that basically it's been sort of a straight line up with a few little dips in between. This most recent dip has actually been the longest duration one that we've seen all year. And the typical year, typically, I believe the average year has like about a 14% drawdown from the highs, or drawdown in the year, not from the highs, but just from, what the year is. So this year is atypical, obviously. And I think, a few weeks ago when we were down around these lows, I think a lot of people, myself included, expected that, we'd probably go a little bit lower. I remember back in the old days, the olden days, like, recent years past, where you'd get a market sell-off and then it wouldn't really be over until you saw like some sort of capitulation, right? You'd typically see a capitulation move where, and especially after you had a period of like several weeks where you'd been going down. So, like if you look over here, you can see that, markets started getting real choppy. That wasn't much of a sell-off, to be honest with you. There was the one big down day and then it reversed real quick. But anyway, everything seems to be atypical these days. But there you go. S&P up at an all-time high past few days. So it's like each day. The Let's look at the Qs here. The Qs have rallied right back to the previous highs, but not quite busted through yet. Let's compare that with the Nasdaq Composite Index, which basically looks about the same, but same sort of thing there. Rallied right back to the vicinity of these highs and has yet not broken through. So that's kind of interesting. So the S&P is actually sort of leading here a little bit. Let's see. Dow, INDU. I have to memorize these ticker symbols. Dow, nominal new high in the past few days here. Zoomed out to the pandemic low, right? Big, humongous move. One thing I wanted to point out real quick. So, Dow, S&P basically at new highs, Nasdaq right at new highs. But then again, we go back to I like to look at the S&P. The S&P is my market. When I say market, something to note here. Let me adjust my chart a little bit so you can see this. There we go. Let's get that RSI on the screen here. So as you can see, the RSI it's 68 now, approaching 70. Doesn't necessarily mean a whole lot these days, but typically, RSI gets around 70, then you start talking about the market being a little bit overbought. And quite frankly, this move here, since was that 2, 4, 6, 8, like 10 days. The market's up like over 5% in 10 days. So theoretically, you could say that it's overbought. Sure is approaching it's approaching overbought on the RSI, and for the S&P to be up 5% in 10 days is what I would consider to be overbought. And that doesn't mean it can't, push a little bit higher. The market can stay overbought for longer than you can imagine, but at the same time, after this 10-day move here, it wouldn't be unusual to see some backing and filling. So, but here's the other thing is, we got 2 more trading days of October, and so you got all the end of the month and then the beginning of the month stuff going on, and then of course we're entering like the seasonally strongest period of the year. I mean, typically like November and December are seasonally strong. But here's the interesting thing is, and let me pull up the Russell 2000, seasonally strongest for the small caps, right? And look at that. When I drew this box on here, there was still, I drew this a few weeks back, I think. There was still some space over on the right. Looks like I need to extend it to the right, but you kind of get the idea here. So Russell 2000 has just been sort of treading water. What's interesting about this is to see the 50-day and the 200-day moving averages, like just right here below the price. Like there's the moving averages. It's really just pinched together, right? 200-day moving average rising, 50-day moving average kind of chopping around sideways, and they're just like pinched together right below the current price action. As you can see, the 50-day moving average is not very helpful here on the Russell 2000 because it's just been chopping above and below it. So that's quite the consolidation right there. So it's going to be interesting to see what happens as far as as far as a directional breakout. And it's hard to imagine, and the Russell 2000 is really close to the all-time high, right? I mean, look at yesterday's high. It's almost at the top of the box. And so if we'd have gotten a little bit of follow through today, it could very well have been right at the highs. But it's definitely up in like the upper quadrant, I would say, of this big long consolidation. So zoom out on that chart a little bit. It's kind of crazy to see an index trade sideways in a big choppy range for literally, 3/4 of the year so far. So that's going to be something to keep an eye on. And of course, it's a market of stocks. There's lots of stocks that have really done well, and lots of them that haven't done so well. And so right now we're in like the thick of earnings season. I believe this week they said like a third of the S&P 500 companies were releasing earnings this week. So once we sort of get through this, I would expect to see more stocks hitting the radar. One of the challenges recently has been that any of the stocks that are potential pending candidates, the potential pending candidates are getting ready to come out with earnings, and we don't hold over earnings. Therefore, I have to eliminate them from the list because there's no point in like waiting for a stock to hit the pending list and then waiting for it to get to a certain point to trigger in, and then there being, just a handful of days to hold it and closing it ahead of earnings. And so that's one of the big challenges of earnings season. And of course, there's no telling how a stock is going to react to earnings. And so that AMD got closed yesterday. It was one of our open trades. It got closed yesterday ahead of earnings. We'll take a look at that in a minute. But first, I figured we'll look at the pending trade here in Johnson & Johnson, J&J, because, boy, it came really close to triggering in. Now, earnings are out of the way on J&J, so that's a good thing. Earnings out of the way. They were sometime, what were they, back here maybe? So interesting sort of chart. Take a little bit of a longer term look at this. Notice how back here you had, I mean, this was, November of 2020, but you had like this little foray below the 200-day moving average for a short period of time, climbed right back up, and basically had a huge move, right? And so we've had a similar sort of pullback here, foray below the 200-day moving average, and actually, this is a pretty nice looking chart here. Um, Back over here, I was talking about the idea that if it dropped any further, it was probably going to be gone from the list. But after earnings came out, it basically kind of managed to recover. So it's got a pretty nice setup going. You can see that 50-day moving average is curling right down. And so, I mean, yesterday it came within a very, very, very close to triggering in, but not quite. And so we'll see what happens here. It's fluttering around, regaining the 200-day moving average. So um, a daily close over that green line is what we're waiting for confirmation. And, kind of looks like it's beginning another upcycle here, right? And this was a pretty nice pullback too. So that's really actually a pretty good setup. And of course, the stock doesn't, on a day-to-day basis, it doesn't have a high ATR. I mean, it doesn't move a whole lot, but what we're looking for is, obviously a change in trend where it's swinging back up, and it sure looks like it's getting started here. This is obviously a patient person's stock, right? Nothing happens real quick here, but it's a decent little setup there. I mean, this little bottoming pattern that's underway here looks pretty good, and so if it decides to, it might spend a couple of days pulling back, or it might decide to start swinging right back up, but we'll wait and see. What's interesting about this is that like way back over here is where it hit the pending list, right? Like I believe it was, well, it was somewhere back over here. So it's been pending for quite some time, but it did take this extra little dip down here. That's a pretty solid little bottom down there. So we'll just have to see what happens with that. So anyway, that's the pending trade. And like I said, once now that a bunch of these earnings are out of the way, in the very near future, I would expect to see a bunch more stocks hitting the pending list. So it's once they have their little their little earnings reaction, then once they have their little earnings reaction, then it settles down a little bit, and then it can be on the pending list again. Here was one, this Nucor. This is an interesting one because it was basically showing up as a potential pending trade, but earnings were about 4 days ago. Earnings were, I believe, right here. So it had a nice little pullback going. I mean, everything about it looked good. And then see this one. Look at all these green bars in a row. Well, this one red bar here that was the day they released earnings. I guess they released after the bell here. And like overnight, the stock got hit, big gap down or whatever, but look, it's climbed right back up. But anyway, so that's an example. That's an example of one, and I don't remember if I pulled that up in the past couple of weeks or not, but the thing of it is that obviously, that was a pretty decent earnings reaction, but you just never know. So some of the stocks, they come out with earnings, and then and then there's like a drastic move on the chart. This is actually still looking pretty good, but okay. So speaking of drastic moves, let's go to AMD here and just take a look at what transpired here. So this is on the closed list. This got closed yesterday at the open because the earnings were yesterday after the bell, and consequently they beat earnings. And I believe it had a big rally yesterday and then gave it all back. Look at this. what do you call that? Like a gravestone doji or something like that. But yeah, they had a really good day yesterday, rallied up, and then after the bell they came out and they crushed the earnings, beat all the metrics, and let me pull that RS. I forgot the RSI was still up there. I wasn't paying attention. Make my chart there. That makes the chart look a little bit better. Not having the indicators below. So there it is. And you can see what it's doing today. Gap down, rallied up to like a new high, and then is sort of just fluttering around. And so, so that's the kind of weirdness that you get around earnings. You just never know. And especially, when a company releases after the bell, typically there's like a move in one direction, a move in another direction, and then the following day, there's a lot of price discovery going on there. So that's a pretty big range today, from 128 to 121. There's a high and low there of today. And so, yeah, I mean, the market is trying to figure out, the fair price of AMD now that their earnings have come out. And a lot of times you'll get a stock that'll run up into earnings, like they run it up ahead of earnings, and then the earnings come out, and then the stock drops, and regardless of what the earnings looked like, and then you'll hear things like, well, the stock just got ahead of itself, right? So I suppose you could say this earnings season has been relatively tame. I can remember in the past where the like the FANG stocks, the Big 10, Big 7, Big 10. I can remember past earnings seasons where they all got hammered after earnings, but so far so good this earnings season. Market's holding up based on, the mega cap stocks. So anyway, you can see the trigger, everything's sort of lined up here. Originally, I drew this trend line well after the fact. I drew this trend line like back over here, somewhere after this price bar, I believe. I had it drawn slightly differently, different angle, that high and that high, I believe. I don't know. But anyway, there was the trigger line way back here. So it triggered in like this day right here at 107.75 and basically never looked back, right? There was the target up here. Kind of went straight to the target. A couple days after it triggered in, we had this big long range day here, which put it really close to the target right away. So, and even compensating for the little bit of a gap here between the trigger and the open here, not a big deal. Ran straight to the target, and then fortunately, closing it ahead of earnings, basically got us out right about where it is now. And so where it goes from here, who knows? And of course, there was opportunity. The system closes everything out ahead of earnings using the open price. And so generally speaking, you wouldn't sell, or get filled, I should say, right at the opening tick. And so anytime yesterday, looked like a pretty good time to cash out and close it. So I believe, let me check here on the closed trades real quick. I believe it was about a 15% or so. Yeah, 15.2% gain there. So that was actually pretty nice. That was a pretty nice gain for the latest, and of course, basically looking at this chart here, you can see that it had this big, long, orderly pullback. Trend kind of changed here, and then just straight line through the target up to where we sold it. And it'll be interesting to see how this shakes out next week. Once the earnings are digested. These trends, once they get started, they can just keep going. So then again, with the market being overbought, there's no telling what happens next. So anyway, so we looked at Johnson & Johnson, which is still pending, earnings out of the way. got a little work to do. Um, and then we looked at AMD, which is the closed trade. And then we have one open trade right now. And let's have a look here. IRM's got a pretty decent little look to it. So there was a trigger line, basically triggered in right at the trigger price. We don't sweat nickels and dimes and quarters with the way that we're trading here. And, so far so good. So far so good, I should say. This is basically the major support line in this particular stock. And so we got had a nice sort of orderly sell-off, pivot low, and unfortunately, like, this trigger didn't really have a chance to come down. It could have come down a little bit more. Like, that trigger line, in theory, with this reversal here, it's like with this big long range day right back up into the range, it was a little too quick for the trigger line to move back down. But anyway, we're not going to sweat the small stuff here. So let's see. Iron Mountain is coming out with earnings on November 4th before the market opens. And so that means, let me look at my calendar here. So that means it's going to get closed on November 3rd using the opening price. So that doesn't give us a whole lot of time. So actually that's a week from today, next Wednesday. So keep that in mind. The system will close it using the opening price on November 3rd, but they're not releasing earnings until pre-market the following day, November 4th. And so basically November 3rd, mark it on your calendar, is the day that going to look to take this off ahead of earnings. And so, that gives us, this is not a high ATR stock either. It's actually, I actually like the way that this particular stock, now this looks like it could have been some earnings phenomenon back in January. You can see a couple of humongous long range days, which is not typical for this particular stock, which tends to move in pretty orderly fashion. In this setup right here is just ideal. I mean, nice orderly pullback, nothing too drastic, but a nice long duration too, basically from September to this is like it's a month and a week pullback, and then a change in trend, right? And so what we look to do is hop on that change in trend for a move back towards one of the previous peaks. So this is sort of ideal too, because the target on this is it's a little around a 3/4 retrace, which is generally doable. That's when you have a stock that like has a big run up and then a healthy correction, and when the trend changes, we look for about a 3/4 retrace to start, and then obviously it can keep going, make a new high. But unfortunately, we're not gonna have the luxury of holding on to this thing to see what happens, because like I say, a week from today we got to close it out ahead of earnings, because we don't want any of something like this like a negative earnings surprise, right? So, and the stop is still like hanging back right around the low of that long range day. But if we get a little bit more forward progress here, we're starting to get some forward progress towards the target above the trigger line. If we get a little bit more forward progress, I expect this trailing stop is getting close to ratcheting up. So that's typically what happens. On the AMD, I didn't actually, because of the way that these charts are designed. Back in the old days, I'd have every single trailing stop marked on here, but wasn't really, AMD was never really in jeopardy of hitting any stop, and so the stop was like still lagging way behind based on the price action, but it didn't really make a whole lot of difference. But on IRM here, um, this trailing stop's probably gonna start ratcheting up a little bit. So it'll be, it's tough to really say. This thing can actually, occasionally put on a long range day, and so that's sort of what I'd like to see ahead of earnings is, and that goes back to what I was saying before. There's in the past, I've seen lots of stocks that just they love to run up ahead of earnings for whatever reason. They run them up ahead of earnings, but then you're rolling the dice if you hold them over earnings. So when we originally designed the system, we decided that the best thing to do was not take any chances because you have no control. I mean, we have every bit of control on our entry and our stop and targets and what we're doing here. Everything is sort of under control based on the chart when we're swing trading, but when the earnings are released, then it's a crapshoot. There's no control. You have no control over how the stock reacts, and over the years, I mean, we've seen humongous reactions, and so if you've held enough stocks through earnings, you've woken up to, a double-digit gap down if the market has a negative reaction. So we just don't do it. So anyway, that's basically it. So 3 sort of stocks in play. 1 closed trade, 1 open trade, 1 pending trade. And the activity should start to pick up. It doesn't help the fact that it doesn't help the system, the fact that we had this humongous quick run up and now we're back to overbought at the all-time highs. So, and right in the thick of earnings season. So right now is probably a good time to sort of be patient, and then I think we'll start to see some activity pick up next week. So, all right, well, thanks for joining me, and I will see you back here same time next week.